I remember the first stock I traded, I had within weeks, I had 10 to 20% plus.
Wow.
And of course, this is a trigger moment. If the first trade you're doing when you're very young, this is something unbelievable that you can earn money so easy, so quickly, and you figured something out, you invested and it worked out, and this is so crazy, and that's why I never stopped more or less trading for the rest of my life, because there was no online trading. There was I get on the bike to do trading. And that's how I did it. So essentially, I went to the bank, I picked up the forms, I filled them out, I brought them home, let my parents sign, and I brought them back to the branch. And so that's were my first stock tradings in the mid-1990s when I was still a student. Did I make lots of things wrong? Yes. But at the end of the day, it was a good, from my personal, if I just look back, I have to say, it was a good story of failing, learning, adapting, starting again and again. So from my perspective, I'm happy. I would tell myself maybe get earlier in contact with people that do what you aim to do yourself.
You Can Start Up is the podcast by Frankfurt School Entrepreneurship Centre, bringing unfiltered founder stories to life. We believe entrepreneurship can be your career path, and we show you how through the stories of founders who already made it. Whether you're a student, young professional, or just startup curious, this is your inside track. Today's episode is a special one, our exclusive pre-Demo Day edition, featuring a conversation with one of our Demo Day speakers. Perfect inspiration as we look ahead to the next Demo Day on September 1st. See you there!
Okay. Stefan, welcome.
Hi Ram, good to see you again.
Great to see you. Really, thank you for taking time off of your busy schedule. I know how it is. But we're here to hear about who's Stefan Kempf, who's the entrepreneur behind Aifinyo, which we'll talk about later. But maybe indulge us. Who's Stefan Kempf? Where do you come from? Where were you born? Where did you grow up?
Well, I do not want to answer that too long. So quickly, I was born in Augsburg, south of Germany, which was a major financial center in the Middle Ages. But since it's not nowadays, I moved in the 2000s to Frankfurt to study finance and law, and that's where I am today, fulfilling one of my dreams to become an entrepreneur, and that's where I am today.
Cool. And you grew up in Augsburg?
Yes.
You went to Grundschule, high school there, everything?
Exactly, everything. I even made an apprenticeship as an entrepreneur.
Wow.
I did my civil service in Augsburg. But then I realized if you want to do anything in finance today, Frankfurt is at least the spot you have to go in Germany. At least this was for sure the thing 20 years ago. I think today it's head Berlin in finance. But I think Frankfurt is still a good spot to be for finance.
That's good to know. Obviously, when you're in a fintech and finance, surround yourself where the market is hot and where the clients are, I would guess. How were you as a student, by the way? Not a university student. Let's get early. We both have kids about similar age. How were you as a student? Grundschule and Gymnasium.
Well, I hope my kids are not really listening to that, but my school career was somehow mixed because when I was interested in something, I think I had quite decent grades. But very often I was too lazy to study for school. I did everything at school. I did sports. I was speaker of the school and of the classes and so on. And I did lots of stuff in the school. And for me, the education was a program besides what happened at school. And I made my way, and at the end of the day, I always realized the point when you really have to deliver. So at the end of the day, I think I delivered quite well Abitur or A grades, because at least finally I made it to study at Frankfurt School. So I delivered at point. I think that's something you have to learn for your life, and which is a helpful tool if you're an entrepreneur.
You started when we just started now recording this. You said, if you want to become an entrepreneur in finance, you have to move to Frankfurt and this. But when you were in school, high school, for example, did you know you wanted to be an entrepreneur? Did you want it? No, you wanted to found your own company. Were you different than the other students?
Yes. So essentially, this is quite astonishing because and nobody in my family is an entrepreneur.
What do your parents do?
Oh, my dad is engineer. He worked at a big machinery group, and he was engineer. And my wife worked in
his wife. You mean?
My mom worked in the public courtyard, so as a government servant. And so more or less I had not much context to people who were entrepreneurs. But nevertheless, I somehow discovered for myself that I am interested in economics and in science and in finance and also on the stock exchange. And that's why somehow I think I was 13 or 14, I catched a business magazine. These days, this was the Capital. It's really a quite old magazine. And I started to read it, and it was really fascinating about stories about corporates, how they behave, what they do. I was really astonished about entrepreneurs, about how brave they are, what things they want to change, and new things they want to achieve, and so on. And so this really catched me somehow. And so I was never after stars from Hollywood and actors and songwriters. I could never remember their names, but I was really in with somehow with economics and business and entrepreneurs and all these stories. And so more or less what I did is when I was in school, I started to read already the Capital every time it came out. I had an abo when I was 14 or 15. Then I realized there's other good magazines like Frankfurt Allgemeine Zeitung or NZZ from Switzerland for business. I started to read them and the Handelsblatt. And somehow I got in the topic, and I started. Then I started stock trading. Still, when I was a minor, my parents had to sign the orders for the stocks because I was not 18, so I was not allowed to do that on my own yet.
Was there online trading, or how did it work?
Well, there was no online trading. There was I get on the bike to do trading. And that's how I did it. So essentially, I went to the bank, I picked up the forms, I filled them out, I brought them home, let my parents sign, and I brought them back to the branch. And so that's were my first stock tradings in the mid-1990s when I was still a student. And so more or less, at the end of the day, this was the impulse for myself to do an apprenticeship as in a bank, because I wanted, honestly, after school, I said, okay, I want to do something that really interests me. And yes, studying might be nice or not. I don't know yet. So I want to do an apprenticeship first in a bank. Actually, what I did is I made an apprenticeship in a bank, and I did distance learning parallel because I wanted to figure out first if learning in finance is the right thing for me or not. And so that's how I made first apprenticeship, and then I studied. And then I decided to go to Frankfurt School to study full time.
Wow. Talking about the stock trading with your bicycle, how was the performance, if I may ask? Do you remember?
I remember the first stock I traded, I had within weeks, I had 10 to 20% plus.
Wow.
And of course, this is a trigger moment. To be really honest, my stock trading in my whole career was not that super successful. But if the first trade you're doing when you're very young, this is something unbelievable that you can earn money so easy, so quickly, and you figured something out, you invested, and it worked out, and this is so crazy, and that's why I never stopped more or less trading for the rest of my life, because I think it's a really interesting instrument that you can participate in other corporates' business and success.
Yeah. Did you grow up with brothers or sisters?
I have a sister, yes.
And is she an entrepreneur, or she followed your parents' path?
No, well, my sister has made a social career and takes care about people. So so there's not much entrepreneurship in my family. So more or less, I'm like the black sheep.
The black sheep, you would say. So how did you hear about Frankfurt School? Was this directly after gymnasium? What year did you come here?
Oh, wow. Yeah. Well, I really informed myself about what's a good way to study finance in Germany. I figured out that there is some universities that are better or not that in the topic. And from my guts feeling, Frankfurt School was the best choice. I did learning and working in a bank at the same time.
These dual studies.
The dual studies, I did that.
It's something amazing. Many of the people I'm inviting here, they did that.
And you know why I did that? Because I had the feeling when I was like 18 or 20 and I just left the gymnasium and I had to think about my career. I thought if I'm just studying, I'm too nervous. I want to do something in real life. I will not be able to study for many years without doing something useful. So, and for me, this gave me a great opportunity to do real work, to do something meaningful, to learn how real people in banks are working and to study the theory as well. And so that's why for me this was really an excellent opportunity to join both. I wanted a profound education because I realized that's really important in finance, and besides that to really have practical experience about what the professors and the theory is talking about.
So up until you joined Frankfurt School, you still were not an entrepreneur. You did not found. So the only thing you founded was your own stock trading.
Essentially, so I realized that I have a big interest in finance and economy, and I also realized that I would like to be an entrepreneur. But my problem was that I had no skill for anything normal people make themselves employed. So I had no technical capabilities. I was not really a craftsman or a doctor or anything or an architect. That was all not my style. And well, it's difficult to start a bank or something like that when you're 18 or 20. So more or less, I skipped somehow my dream. I said, okay, well, let's do finance. I like finance. I like entrepreneurship. Let's go for finance and take care about entrepreneurs in the bank. And that's what I essentially did. I moved quite fast to the point where I was working in debt capital markets and I covered corporates. And so more or less I was close to the people and the stories I liked. I was not really one of them, but at least I was really close to them. So, and for me, that gave me a good feeling for many years at the beginning.
It reminds me a little bit of what I was doing, leverage buyouts. When I was based in Hong Kong, and I was very close to the entrepreneurs who were selling their companies. Is this roughly similar?
Well, in debt capital markets, that's a very quick game. Somebody needs a debt facility. It's 2 weeks, 4 weeks, 6 weeks, and the deal is more or less already over. So it's not really a time to build up relationships with the people. But nevertheless, I was really close at corporate finance topics. I was really close to entrepreneurial topics because usually I wanted to invest, I wanted to do something. And so for me, this was already a big leap because I came much closer to the big world of finance and corporates and entrepreneurship.
So you said something that many of us relate to. You wanted to have your own business, but you felt you didn't have these exclusive capabilities to found something. One thing you did discover, which you're very fortunate to, is your passion. You like finance. When you speak about it, I can feel it. So how did you go about then moving from the banking, and what happened next? When did you become your own employer?
Look, usually a career in banking is you start with small money lending. You start in SME lending with 10,000 euros, then you lend 1 million, then you lend 10 million, then 100 million. So more or less I started when I was student already in debt capital markets with 100 million. So for me, more or less, I thought, okay, I realized already how that's working. More or less, I started at the end of the volume of lending. I want to be closer to smaller companies, and that's why I think it was about 2008 or something like that. And I moved from debt capital markets from a bank, and I switched to smaller corporates that were lending themselves money to SMEs via trade receivables finance or asset-based lending opportunities. So more or less, from today's perspective, I now know that for me, the banks, because the banks are really huge, and you're a small wheel in a huge organization, and your capability to change something in that huge organization might be limited. So that's why I was looking for something where I can have more impact of what is happening. And that's why I went to smaller companies. The big benefit is that you have a much broader view on the things that are happening, because it's not that you have 10 departments for every problem, but more or less you have like one person for 100 problems. Yeah, and that's why you get much better in problem solving. You get much better in understanding how everything is working together, and that's why for me, well, I left the bank, went to smaller companies, and then I realized, okay. Now I found something I can do myself.
Nice. I know exactly where this is heading, and I have to tell you, I was managing accounts receivables for large stock listed companies as one of my first jobs after my master's, and I just love it. The whole receivables story, the working capital, it's quite impressive. These companies that you were working for, were they based in Frankfurt, and how? What was their added value? How were they also entrepreneurial led?
Well, the companies I worked later for, one was in Hamburg, one was in Munich, but I continued to live in Frankfurt because here I had my family, my network, and so on. Mm-hmm. And they were led by entrepreneurs, and their business was more or less doing SME lending on a large scale by number of lending tickets, and on a small scale by the number of ticket sizes. Yeah, and I realized that it's today it's really, from my perspective, it's much more interesting to do like a million times 10,000 euros lending than to do 100 million lending ticket, because this is much more challenging today. Because you have to be really good in processes and efficiency, in technology, in marketing, in user experience, and so on. So it just grabs so many techniques and things you need to know to do that. So for me, that's today much more fascinating to do the single big transaction.
I agree. And okay, so then what? How did you reach Aifinyo? Were you still a student, or you graduated?
Well, I started a business besides I was working in 2008. This was really besides my job. I launched a first business, and I tried to do a consulting business, which gave me some first knowledge about how to start a business, finding tax consultants, doing your whatever, all the bureaucracy you have to do, and so on. It did not really work out. For whatever reason, it was a nice business anyhow. And then in 2012, I more or less had a lucky situation. The company I worked for, they went out of business because there was a huge dispute between the shareholders. And of course, that's a moment you know you have to move, you have to change, you have to do something different. And in these days, I talked to another major manager of the company, my friend Matthias, and we said, well, let's just do the same business ourselves. Do the business ourselves, but better with another scope. So, and well, that's what we did. In 2012, we started our own business, more or less out of nothing. We had nothing we could really start with, but we had a network, we had knowledge, we had people that trusted in us. So we had the most important things.
But how do you give credit without money, or did you have, or did you need even a license? You must have, perhaps.
Yes.
Right?
So that's the really good thing if you are in the industry already for a couple of years, because you build up a network, you build up reputation, you build up people that know and that trust you. And at the end of the day, the setup we had was we had a handful of business angels that believed in us and that gave us some money. We found a company with a license, more or less license only. At the end, essentially no operations, but a license. So with the money, we bought the company with the license. And since we knew some banks and some investors for many years, we got some millions in loans from the beginning, which were, of course, based on a personal guarantee. I mean, I had no money to really pay it down, but I signed the guarantee anyhow. So more or less, then we had everything. We had a license, we had a company, we had funds to pay out, and we hired the first people to join working with us.
So you took some risk?
No, I got all in.
All in. That's that's definitely the way entrepreneurship works at the end. Look, just to recap, I like how this has progressed. You moved into smaller companies, so you have a bigger view of what is going on. That's one thing I would recommend every entrepreneur to do, even maybe have an internship in a startup, in a growing, scaling company, right?
Yeah.
And then you mentioned something super, super important, reputation. It takes years to build a reputation. It can take seconds to ruin it. Yeah. And I think the reputation is what helped you get off the ground at the end of the day, right?
Well, reputation is very important because at the end of the day...
Trust. When I say reputation, I mean trust. And yeah.
Well, I would say reputation is you have to people you do not know that good, and trust is what you have with people you are very close to you. So both is very important. So first of all, trust is important with your business angels, with your co-founder maybe. This trust is absolutely essential because this is reducing transaction costs to a minimum. A funny story is my core business angel, he made the money transfer to my account before we signed the contract. So if you're speaking about trust, this is really a trust relationship. You do the contracts, of course, to have it for legal and for tax reasons and for documentation. But if you trust other business people, there's still people you can do transactions and you can trust that you will make the documentation after.
Yeah, for sure. We'll talk about co-founders a bit later. But so it's not all rosy. You got started. Aifinyo got started. Maybe tell us in a couple of sentences, what is Aifinyo now?
Yeah, well, what is Aifinyo now? It's by far not with what we started in 2012. Today, Aifinyo takes care about the invoice lifecycle of SMEs. So we help SMEs to process their bills, inbound and outbound. We're not only a SaaS provider for cloud-based billing solution, but we also help SMEs to finance their bills. We are now going into the payments of bills, and we are also in the collection of bills. So at the end of the day, we do anything about the life cycle of invoices, billing, financing, payment, and collection.
And for the SME, it's basically a dashboard where they see all their invoices, open and overdue and stuff like that.
Yes, for the SMEs, it's a mixture because we are not a pure play one product show. We are more an ecosystem of core essential financial needs of all SMEs. Any SME needs to write an invoice. Any SME, the sooner or later, needs financing, needs payment, and so on. And so what our ultimate goal is to be something like a financial operating system for SMEs. That is not only a information or a advice platform, but which is also helping in the execution. And execution is, of course, core because you have to be fast, you have to be lean, you have to be easy understandable for SMEs. And so what we try to is we try to integrate all that in our platform.
Cool. And okay, so tell us about the hardships a little bit. It's not all rosy. No. There's failures. How do you get through them? What maybe give us an example of an early failure.
Yeah. Well, so first of all, I think I start with what I really like at this entrepreneurship. You can learn something new every day. and you're also forced to learn something new every day. But if you ask me about the hard things, some things you learn you would prefer to never have learned. So the thing is, the hard times is, as an entrepreneur, usually that's what I figured out for me. If external factors are changing and they are somehow out of your control, I think this is the worst times for entrepreneur. Most entrepreneurs I know are somehow control freaks. They like to change the world, but they really think they have it in their hands to change how things are going. And if this is not the case anymore, because external factors are just stronger, that would really brings you a hard time as an entrepreneur. In my case, the first time I had really a hard time was with the outbreak of Corona, because from one minute to another, all the parameters of your business are changing and you cannot do anything against it. And you have to be super, super quick in adapting your business such that you're not failing. And I think what no entrepreneur likes is to work on not failing. Yeah. Mm-hmm. So what you try is you try to move forward. You might accept that you have to fail to adapt and to go faster, but what you don't like is to work against failure. Yeah. And that's when it means that this is the case, or might be the case, if many external factors are changing at the same time.
So what do you do? What motivates you to get through these hardships over and over again?
Well, I think the illness of entrepreneurs is that they are perceived too optimistic. You know, if you have a normal level of optimism, most likely you don't even become an entrepreneur, you know, because all statistics are against you. Yeah. Yeah? The likelihood that you fail within the first 5 years, everybody knows, is 60 to 90%. All of the entrepreneurs knows these figures as well, but they start anyhow because they think, okay, but it will be different in the future. Yeah. And so I think as an entrepreneur, you have to be optimistic. You really have to be somehow brave and bold to bet against some developments. You have to just believe that what you're doing is right. And that's, I think, the foundation for sustaining what you're doing. Yeah.
Super great insights. I have to repeat it. Basically, I liked when you said entrepreneurs are control freaks. Yeah. That is so true, and I see it with many entrepreneurs. And really, the most successful ones are the ones who are trying to control everything, work the long hours, and having to be optimistic. That this definitely takes you through the hardships because everything is against you. So what was the specific moment after the COVID pandemic when things started to change for you? And there was a turning point that you saw the business now is going in the right direction.
Yeah, I think what I really learned from Corona is that you have to be brave, that if you assess a situation and you realize that you really have to change a lot to keep things going, be brave enough to really change a lot from day zero. Because what I've realized and seen so many times in my life, if I've seen, and I mean I see thousands of entrepreneurs every year, what I've seen so many times is people see there is an issue, they see there is a need for change, and what happens then is too little too late. And so what I can just do is to encourage all entrepreneurs, if you do your assessment, make a clear cut, go for the new strategy, go for the new product, the new customer, for maybe the new team. So you have to reassess everything. If lots of things in the market or wherever are changing, be brave to really change also your business.
How big is your company at the moment?
Currently, we have about 70 employees.
70 employees. And co-founders?
Well, my co-founder Matthias is still on board with me. So more or less the team of co-founders and business angels is still working. We are
Nice.
all together as a team. Nobody left the boat. So we still have fun working together. And entrepreneurship not only means you start a journey with people, but very often it ends up with friendships. And so more or less all my investors from the beginning and my co-founder, of course, are friends today for me. And what I really have to say, I'm super happy that we're not working good together from a professional point of view, but we still have fun to meet us for a drink, a coffee, or a beer, and we are not set up of each other because we're working so much together for so many years already.
So to stick with the co-founder, do you argue with your co-founder? Do you have differences of opinions? How do you get through them?
Yeah, we need to have different opinions because otherwise there would be no match between us. If he would
So
have,
what role did he play, your
Yeah.
co-founder, when founding the companies? The company.
So he was, and he still is good in marketing and sales, and I'm good in financial strategy, technique, and stuff like that. And that's why we were a really good match, because we were really balancing our strengths and weaknesses together. But this also forces you that you talk about who is doing what, who's responsible for what. And then if you know the other person better, you also are better in assessing what is the weakness of the other, how can he improve himself, what's the points he should do, he should not do. And I think it's very essential in a relationship that you have the trust to talk with each other of how to be more successful together, of course, yeah. And to have this trust is essential. I know lots of entrepreneurs where you have managing directors or whatever, and the people, they coexist.
Yeah.
They talk the most necessities, but they don't talk about feelings, about future, about responsibilities, about what to do next, about strategy. They don't talk about the really important stuff. And I think this is a really success factor if you can talk with your core crew, and the core crew is the core investors, the core co-founder, your core employee manager. If you have the feeling I can say anything and we will find a solution for that, I think this is really crucial. And of course sometimes we have tough things we're talking about, but it's always in a very good way we are talking about it. And that's why I say it's not important to have the same opinion once you enter the meeting. It's important that you have a joint plan when you leave the meeting. This is important.
You keep referring to your investors more than the usual guests I have.
Okay.
So your investors are practically co-founders as well. You have a very close relation to them. How hands-on are they with the business?
Well, I had the luck that my business angels were all entrepreneurs themselves. To be honest, I had no VC. I had no financial investor. I had no public fund. All my business angels were successful entrepreneurs themselves. They were all CEOs, supervisory board members, multiple owner of corporates, and so on. And that's why I think this is very important, because of course so we share the same spirit, we share the same passion, we speak the same language, and of course this makes it a lot easier. And also we have somehow the similar expectations about business.
Wow. So no VCs, no institutional investors on board.
No, well, we thought about it 2012, but decided not.
Okay, yeah, this is a really great insight to take into account. Your co-founder, you met in the previous business, right? Yep. And now your friends, families are friends, meet outside work and everything. How many direct reports do each of you have out of the 70 employees? How did you structure that?
Well, honestly, I'm not counting. I don't know. We have a really good management level. We have really good C-level and heads in our business that are reporting to us. I have to explain that because this is also something very, very important if you start a business. So to get self-employed is the one thing. Everybody is able to somehow structure himself. Yeah. So the first step in entrepreneurship is you are alone. You're a freelancer, whatever. You're working on yourself. The step 2 usually is you build a crew of assistants around you. And usually this works with company sizes up to 10 or 15 employees. And that's why the vast majority of corporates in the world have less than 10 employees, because this is you have a master and you have 10 assistant structure. The real challenge is to grow outside 20, 30, 40 employees, because the typical master and assistant structure, like think of your doctor, you know, you go to your dentist, he's the master and he has 10 assistants who are just making his work more efficient. Usually, if you grow beyond 20, 30 people, the structure is not working anymore. And the mind shift you need to have as an entrepreneur is how to build up a system that is working itself and is not dependent on a master or you. A system that is not working with assistants and masters, but which is working like you have like a culture and a structure with people with knowledge and capabilities and how they contribute to each other. And that's the point. You have to build up a leadership infrastructure in your corporate. And I think this is the moment where many entrepreneurs fail, because this is very difficult. It takes time to find the right people. Very often you realize that some people you were betting on, they did not really work out, but then others, they surprise you with astonishing results. And that's how you have to form your management team. You have to improve it. And that's where we are today. Luckily, I can be with you here in the podcast because I have strong heads and managers that are taking care of our operations.
Cool. Thank you for that. You mentioned you see a lot of entrepreneurs regularly. In what context? Do you coach? Do you invest as a business angel? Are you an advisor? How do you meet these entrepreneurs? In what context?
Yeah. So a minor context is, yes, I'm in a supervisory board. Yes, from time to time I invest in myself. But honestly, this is just minor stuff. At the end of the day, our business sees entrepreneurs every day because they're our customers. Of course, I look at my customers. I'm responsible for risk and for analytics. So I see lots of numbers every day. I can dig in lots of numbers every day, and I'm actually doing that. But anyhow, of course, I still speak with lots of our clients, and that's where my contact to entrepreneurs and startups and also grown-up businesses is coming from.
Cool. Also, you're one of our mentors here at the Frankfurt School Entrepreneurship Centre, so that's a big addition to us. Yeah. I have 2 more things I want to cover, and we have some time. The failure. You had the failure, the consulting company. I want to go back to that. What did you learn from there? Why did it fail? Do you mind sharing it with us?
So why did it fail?
Every entrepreneur fails one at least, so...
So why did it fail? I would say there's like 2 or 3 reasons at the end of the day why it failed. So first of all, what was the business about? It was making advisory to banks. Yeah. And I advised banks on their investments with a friend of mine together. And essentially it failed because I was not 100% sure if I need a regulatory license for that or not. And to be really honest, I made the mistake to ask if I need one. I would not do that today anymore, because if you ask, the question will be yes. So you have to, I would say today, you have to assess that on your own, and then you have to be either sure you don't need one, or you have to be bold and brave enough to just go without one. Funnily, I know a company that is doing exactly the thing. I started in 2008 and they still exist. They're a huge company now, and they did anything I wanted to do and they're still doing it without a license.
Yeah.
So the funny thing is, sometimes don't ask too much for permission, because there will be many people who will tell you that everything is difficult, it needs to be assessed first, and that it might scare you up. So maybe if the failure, the reason for the failure was maybe that I was asking for permission too much.
This is I learned it from my friends long time ago. We call it kickback questions. I don't know where the word comes from, and the first time I asked a kickback question was when I joined the army, and the question was, do I need a haircut? You know, I probably could have gotten away without a haircut had I not asked the question. Anyway, so final question. If you could look back at your life, looking back at Stefan at the age of 18, what would you tell yourself? What would you recommend to yourself? And you have now a son also approaching that age, so this is
yeah, that's super interesting. I have to admit that my son, I have the feeling that he gets lots of stuff quite quickly, because he somehow adopts my understanding and my viewpoints. And many of them I had not when I was 14 or 18, because like I told you, nobody in my family was in business or was entrepreneur or something like that. So somehow I had a lack of guidance and knowledge, and how the world in this sector is really doing and so on. So from today's perspective, of course, there would have been many shortcuts to do things faster, easier, more successful, you know. But at the end of the day, all the hurdles you have, all the problems you have to solve, all the extra miles you have to walk because of a failure, that's the moments you learn, you improve yourself. That's when you grow. This is when it makes you more resilient. This is when you grow as an entrepreneur. So yes, there would have been many shortcuts. Did I make lots of things wrong? Yes. But at the end of the day, it was a good, from my personal, if I just look back, I have to say, it was a good story of failing, learning, adapting, starting again and again. So from my perspective, I'm happy. I would tell myself maybe get earlier in contact with people that do what you aim to do yourself.
Yeah. And do you think, I know I said it's the last question, but do you think your son will follow in the entrepreneurial mindset?
I think he, and by the way, I also have 2 girls.
Okay, sorry. I just met your son. This is why I'm referring back to him. I can tell you that my son tells me, Dad, please, enough about startups. I don't want to hear any more talk about startups. So I don't know if my son will take that path.
Well, I think he has a very good prerequisite, because somehow he's a rebel, and being a rebel is a good starting point for being an entrepreneur. So I think he has the best opportunities to start a business. But if he's not doing, I'm also fine with that.
Cool. Stefan, reputation, trust, be optimistic. This is some key learnings, but it's been fascinating, and thank you for taking the time with us today.
Thanks, Ram, for the talk we had.
Cool.
Hey there, this is Christina from Entrepreneurship Centre. Just a quick reminder that we are also active on Instagram. If you're enjoying the podcast, we'd love for you to join the EC community by following us there. Check out the link in the description below. Have a good one.